Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, welcome back to my channel. It is Tuesday, January 13th. I'm in the process of packing up my house that I've lived in for 8 years and moving to another place locally. But as you know, when packing and sorting and throwing things out, it takes a lot of time and energy, and the house is a mess. So this part of the room that you're looking at is what I was able to dig out of all the boxes to make a little bit of a calm space for us to do the stock reviews. Tonight, I'm going to add about a handful more tickers to the plate because a friend of mine asked me about, hey, is this the right time to look at defense stocks because of the way things are going on in the world? The defense industry is doing well from a price point. Their tickers have been going up quite a lot over the past year. So we will add those to the end of this review, and let's get started. Kick things off with triple Qs. You can see overall the price action has been a consolidation and price has been moving sideways. Overall, there's no change in the momentum. That's the key piece. Since there's no change in momentum, my prediction for triple Qs and the tech sector as a whole remains unchanged. The price will go down. Okay, so if you're long triple Qs, I recommend that you take your profits and wait for the right point to come back in. But right now, this is not the time to go long on triple Qs. Switching to a safe haven play that most people talk about is gold miners, gold stocks, and metals in general. GDX continues to have an upward movement in price. And we can see, let me just annotate a little bit more, that the movement is another all-time high. At the same time, I want to make it very clear for all of you reading and watching this channel is that the divergence remains to the downside. All of this RSI indication down here is opposing to price. So the momentum is diverging. Because of that, I feel the price point for GDX up here isn't going to last. My annotation and prediction remains unchanged. It is going to move downward. So don't go long. This is not the time to go long GDX either. This rotation out of tech into metals isn't going to work well for you. So unchanged for my prediction for GDX. I'm not long GDX. Switching to Bitcoin. Bitcoin is, let's see here, my prediction of 58K, okay, is still in play. I'm not changing my prediction. What I talked about last week was how price may come back to retest this lower part, this part here, this part of the flag. And you can see here, the price was rejected last week. This week, price is coming back up, but with very low volume. Today's volume is 21,000 shares, whereas, for example, back here, let me see, today's volume, 21,000 shares. It's kind of a blip down here. You don't really see it being a big candle from a volume standpoint. So really, this area continues to be resistance. I would not recommend going long on Bitcoin or any of their proxies because lower prices is still in play. Okay, so I'm just going to slide this over just for clarity. But I've been very clear on my prediction. Okay, and it's been like this for, I don't know, a month now. Okay, switching to Microsoft, a tech play. It's playing out as predicted. I talked about a double top here and how the momentum has waned and that we had this flagging action. It's very clear the flagging action is playing out. Okay. The clear rejection again I talked about how this is a zone of resistance. Price on Wednesday last week opened up here and then was sold down, fought throughout the day, but ended up below the lower edge of the flag. And then subsequent selling, lower prices until today. Really no change in the prediction. Lower prices for Microsoft. Take your profits while you can. I really do think it's going to enter the gap fill down here. Okay, that's a zone of, I feel a lot of folks are going to be very afraid once it enters this gap fill because it's going to lose a lot of momentum, or it's going to gain momentum to the downside, okay, if it enters the gap fill. So there you have it. That's Microsoft. Over to Northrop Grumman. I've been talking about them for a while now, tracking their stock. I talked about how this is a zone of resistance up here with this red line, horizontal red line at, what is this, 638. You can see that today's price action, in fact, over the past week, there was an attempt to break through 638 right here on Thursday the 8th, right? It opened up here, got sold down. And then on this day, which is Monday, yesterday, an attempt to push through, failed. And then today, it opened above it and only to be sold back down, okay? The momentum is down here. Let's take a look. It is to the downside. Okay, I'll make the annotation. To the downside. And what this is causing, and I talked about this before, is a double top. One top here, one top here. They may attempt to, the market makers may attempt to peek its head up a little bit more to create even greater divergence, to get more people to buy in so that they have liquidity to dump their shares. So that's the move that's likely to come. My overall arrow annotation is to the downside. Okay. Yeah, be really careful. Don't get sucked in to go long on this. Take your profits. For those of you who have pension funds with Northrop, take your profits. I told you, okay? Let's switch to a couple of the other rotation stocks. I've been talking about American Express for a couple weeks now, saying that this is a zone of resistance up here, and don't go long, even though all the pundits tell you to rotate out of tech, go into financials, because what did I tell you? I told you the price action and the RSI are diverging, and hence, look at this, okay? Today's price action is way below this trend line. Now, what they're going to do is they're going to say, you know what? They need to get more buyers in. So they're going to release news to get you really hopeful to buy back in. So what they'll do is they will fill the gap, likely fill the gap. The opportunity for those of you who want to go long, this is not the opportunity to go long. But for those who want to join the sharks to go short, this is the opportunity to go short. So I'm going to put another shark up here. For those of you who follow my channel, when I put the shark, it's the signal that the big players have told one another, guys, let's take our profits, make a lot of money, and leave the bag of stinky poop with the dip buyers. Okay, so that's what they're going to do. So I told you, get out while you can, or join the trade. The really beautiful entry for those who want to join the shorts, join the sharks in their selling of American Express, is to get an entry along this line here. Let me just kind of zoom in a little bit to make it clearer. So anywhere along this resistance line, that would be a beautiful entry short. So likely the next few days, they'll kind of push it up somehow, right? And then they'll sell it off with more conviction in their selling, okay? So if I were to take a short, I would take it along this resistance line to join the sharks. This is a nice setup, nice trade setup. Switching to Bank of America, same thing. The area of resistance up here, as I had informed you, played out. Now price is coming down to this zone of support down here. Let me just clean this up a little bit so we can see it. There is some support right here. I'll make it green. Now, what does that mean? Does that mean you should go long? No. That means you should watch out for the narrative, the narrative that the news will issue to say, hey, interest rate this, interest rate that, the Fed this, the Fed that, whatever. They're going to sell you something so that you can hold the bag so they can have liquidity. The ultimate move is a break of this support. And that's where you have to be really careful. Personally, this setup is the same as the American Express setup. So when price gets below here, below this red, okay, it comes back to test the red from the below side. So price will come up a little bit, break down, and come back up to retest before it does its further move down. That's what it'll do, okay? This is the opportunity to join the sharks for a nice entry short. That's the setup there. Let's switch to one of the few long opportunities. This is Proctor Gamble. There are not many long opportunities out there. The setups aren't out there. If they were, I would tell you. At the moment, they're not. I'm going to add this, what looks to be a line here. I'm just going to go like this. Okay. So you can see what I annotated here. Okay. First, let's look at all the building bullish divergence down here. Okay. RSI is showing growing bullishness diverging from price. That means the momentum for the whales to go back in has been presenting itself. Hence, I put the couple of whales. Look at this whale right here. This whale here is highlighting a key thing, that these 2 points, actually I should annotate it a little bit more clearly now because it's played out. These 2 points have been the what I consider a double bottom. Now, I talked last week to say, hey, if you get an entry here, that would be beautiful. Or even more beautiful is if you could get an entry down here long. So these are opportunities to go long. Down here at 135, that would be beautiful because the divergence is so great. But you could see that immediately after this divergence, actually I should increase this, it goes like this, okay? Price has already rebounded, but to me, I'm not ready to jump back in yet. So I would rather jump in at another retest of this down here or down here, okay, at 135. Okay. Now, if you look up here, I just drew this line tonight, this line, and you can see one touch here, okay, a touch here, a touch here, and now it's essentially there again. Let me just draw this again, okay? So what does this mean? This means we should wait for how price behaves along this line. If I would expect it to get rejected again, okay? Get rejected again. Actually, that's what I wanted to do. So I can take an entry long down here or an entry long down here. But if it actually breaks through and get above this trend line, right? Then my entry, I would want to take an entry down here at this part of the trend line down here, because that's what it would do, okay? So a beautiful entry would be right here if it breaks through this week. But if it doesn't, no problem. We're not chasing this trade. We're going to wait for price to come down here again, okay? So that's the setup for one of the few long opportunities out there for Procter & Gamble. The long-term move for it, and that's what you should ask me, hey, so where is it going to go? There's so much divergence. It goes all the way back. Let's zoom this out to the start of 25 down here, okay? So for me, I really think at the minimum, it might even get up to this 160, okay, maybe a little bit higher. So we'll see, okay? But for now, get ready for the long setup. And then for the next 3 or 4 tickers, we've got Palantir, Raytheon, and Lockheed on deck. This is for those who are looking to join the defense stocks and the narrative that it's time to go long with defense stocks. And to be fair, the news makes it look good, but I don't follow the news. I follow the sharks and the whales and how they trade. So what we can see is tremendous buildup of divergence here since the November timeframe of 24. With all of that divergence, one key thing I want to highlight is how price has been moving, mostly sideways over the past 6 months or so, okay? And I've been showing all these sharks here because the momentum has changed, okay, tremendously. So with the momentum change to the downside, price is just consolidating. And the ultimate move is to the downside. Once it breaks this purple trend line goes back. This is for Palantir, goes all the way back. Excuse me here. Okay. Here's all the way back essentially to when Palantir was created, okay? You can see how it was support up here. There's some fighting and then resistance, essentially resistance. And now price is coming back, resistance here. And it's been a dance along the purple trend line. To me, I don't think there's momentum to the upside. There's nothing down here that shows that the momentum, the whales buying back in, has taken place. It hasn't started. If anything, the sharks are unloading, okay? So don't hold the bag. The safest move is not to the upside. Wait for Palantir to drop tremendously before you buy back in. Wait for the momentum change to take place before buying back in. Right now, really, if it breaks this purple trend line, it's a sell signal for the sharks. Switching over to Raytheon, similar setup, cleaner chart. Actually, this is very clean. I like the way this chart looks. So here's a trend line that I've drawn since the April 25 timeframe. The reason why I picked that time frame is, to me, this double bottom. Okay, bottom here, bottom here. Why is that double bottom important? The double bottom here and here coincides with diverging momentum. Look at that. The momentum switched. Okay, there was the switch. And that would have been the moment to go long. If you took a long there with the momentum switch here, then, what's price here? It's like 114 up to 194. That's a huge move, okay? What is that, 80%? 70%, okay? If you got that. But, if you did, great, because some of you have this in your pension. I'm telling you, get out. Take your profits now. Move it to a safe haven like cash. Because look at the RSI down here. RSI has changed completely. And I'm going to put the shark signal here because not only was this the first sell signal right there, okay, but price has come back into resistance. So all of this price action here is back into resistance. And what I always talk about is the momentum change, price behavior always comes back to hit resistance from underneath, okay? This is the time where they get the dip buyers. They're like, hey, it's a nice discount in price, buy back in. And then they send out news to get you excited, okay? What was the news that they sent out? Hey, Citigroup on the 13th, which is today, said, hey, it's a buy. And why would they do that? They would do that because they need liquidity. They need people to buy back in so that they can sell and take their profits. So the actual move is to the downside for Raytheon. I told you now, okay? On the 13th, I said it. Don't come crying to me. Switching to Lockheed Martin, same setup. Slightly different chart, but same setup. Let's zoom out to the weekly. Lockheed is a ticker I've been following for a while. The reason why I want to zoom out from the weekly standpoint is to highlight this purple trend line that I've annotated. It goes all the way back to here, which is January of 2020. Okay. And I want to note for you how all the way back in January of 2020, that's the first touch of the purple as resistance. Remember, each candle is a week. There's another touch here, resistance, and all these touches, resistance, 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 all through 22, 23, then boom, finally pushed through, okay? But it pushed through without positive momentum. It's all price action. So what happens? It reached a peak and was sold into, okay? If we look at this spot here, let's go to the weekly. Here it is. If you look at that spot here on the weekly, okay, on the daily, there's all this divergence. And boom, selling, selling, selling. And once it broke underneath the purple trend line, price was not able to regain strength to get above it, okay? The purple trend line is there for a reason. It's long-term price behavior that I expect if price is going to push through a purple trend line, it will do it with a lot of volume. That's the key piece. Is there a lot of volume? So now when I look at Lockheed Martin today, and in fact, over the past few weeks and months, you can see the price moving upward. It is parabolic. Parabolic, blah, blah, I can't even say it. Parabolic price movements always lose momentum. And you can see it's coming up to a peaking point into resistance where this purple trend line is. So if you intend to go long Lockheed Martin, this is not the time. In fact, I would have you wait for it to come back to this purple trend line to see if this line plus positive momentum in the RSI down here will have enough conviction for us to go long. But right now, the sharks are going to go short. So I'm going to put the signal here. They're going to sell. Sharks are going to sell. Okay? So I told you, don't go long Lockheed right now. Just wait. And even if it pushes up a little bit above this purple trend line, right? I'll even zoom in for you so you can see the price points here on the right. 571 or anywhere around the 575, high 560s. That's resistance. Don't get sucked in. And in fact, earnings is on Thursday. So what they might do, because this is how they like to do it, Thursday next week, the 29th, what they might do is they might have price move sideways for the next couple of weeks, push price through, like peek its head through up here, maybe just before earnings or just after earnings to get a lot of liquidity, a lot of people buying in so that they can sell, okay? So that's my prediction is they're going to have a lot of news to get you to buy in so that they can sell. All right, so those are the tickers. They're all really setting up the same, into resistance for additional selling. So those are the tickers for today. I hope you enjoyed the content, learned something or two. Please give me a thumbs up, like and subscribe, share my material with your friends and family. Wish me luck with my move because stuff is everywhere. I hope to be able to do a review next week on Tuesday, just to give you all the latest info, but who knows how things will be if I'll even have internet or Wi-Fi at the next place. So good luck with everything, and I will see you soon. Bye.